Welcome to ForexTV.com. Today is Wednesday, February 6th. I'm Remy Hokie for New York Forex Market Buzz. In afternoon trade, as of 1 p.m. Eastern Time, Euro dollar is at 146.43. Sterling dollar is trading at 196.23, while dollar yen is around 106.70. Earlier today, the Labor Department reported that U.S. non-farm business productivity rose at an annualized rate of 1.8% in Q4. In Q3, productivity showed a gain of 6%. Meanwhile, unit labor costs climbed 2.1% in Q4 from the decline of 1.9% in Q3. For the entire year of 07, productivity was at 1.6% and unit labor costs rose 3.1%. Joining me this afternoon is Greg Michalowski, Vice President of Trading and Liquidity at FXDD. Good afternoon, Greg.
Good afternoon, Remy.
Thanks for joining us today.
It's always my pleasure.
Well, in today's session, we're continuing to see mixed trading for the U.S. dollar against the majors. U.S. equities are up after tumbling yesterday. But first and foremost, why are we seeing continued support for the U.S. dollar?
Yeah, I think it has to do with the old adage that it takes two to tango, and what we're seeing in some of the markets like the euro and the sterling, that their countries' economies are slowing a bit. Yesterday there was a report out of the Eurozone where retail sales declined by 2% on a year comparable basis, which was the largest decline ever recorded, going back to 1995. So the market sort of took that to heart, and we saw the euro decline, the dollar get a little stronger against that currency. The same can be said about in the UK. They too are, they're expected to lower their rates tomorrow. So they're seeing some weakness in their economy as well. And what anyone who travels over to the UK has said to me is it's very, very expensive over there. If you take your $2 and get one pound back, and the country relies a lot on tourism, and that's got to hurt their economy. They're also exposed in the financial arena, and we know the problems that's happening there. So it's more of an indication of there's another country's economy that goes into the value of a currency pair. And although the U.S. still shows a weakness and will probably continue to show weakness, a lot has been priced in as far as the dollar goes, and it's just sort of a catch up with the other currency pairs, and that's why we're seeing dollar strength versus some of these currencies.
Well, Greg, touching on what you just mentioned, let's talk about how this translates into price action for the major pairs. The FX market awaits the BoE and ECB rate announcements, and there are expectations for a more dovish position from both banks, given the slowing growth in both the UK and Eurozone, as you mentioned. But from a technical standpoint, if you could give us your forecast for the euro and the sterling.
Well, first off, let me address, I guess, the meetings tomorrow. I don't expect the ECB to do anything, and quite frankly, I expect Trichet to probably continue on his tough talk on inflation. In the UK, I do expect a cut of 25 basis points from them. They don't have a meeting or an announcement after their rate cuts or the rate raises or the rate changes. Really, we have to wait for the results of that, which will come out in a couple weeks. But in any case, in regard to technical levels, we're seeing the euro find support down here near the 145.85 level. There's some decent support from a retracement standpoint at that level, and that held very nicely this morning. So I sort of expect it to sort of move a little bit higher, especially in light of the fact that the ECB is probably not going to raise rates, and Trichet is probably going to speak a little bit bearishly about the currency. Having said that, There is resistance at 146.50 level, 52 level. We're going to need to get through that level for the upside to take hold, and for me to be a little bit more confident in regard to that. In the UK, we too came down to a decent support level this morning, and we actually broke through a little bit through it at the 95.74 level, but it wasn't able to close below that level on an hourly chart basis, which was a good sign for me. Right now we're testing a 21-hour moving average, which is another short-term indicator on an intraday basis for myself. And there is a potential that we may go up and test the 196.60 level. Dollar yen is stuck really in a triangle pattern. If you look at that chart, since the 23rd of January, there's a nice uptrend that goes up, and if you take the 25th, the high from January 25th, and connect it with the January 30th high, you have a top line that comes down. That level was broken yesterday when we had a short covering rally during London hour, but it was quickly reversed after the service sector ISM figure came out, and right now we came back to the happy level, if you will, where all the moving averages are converging in the middle of this triangle. It's coiling. The market in dollar yen is coiling to do something either to the upside or downside. My suggestion is just to sit tight. We'll let the market tell you what it wants to do, because usually when we go sideways for an extended period of time, there generally is a pretty decent move that follows afterwards. So sit tight. Don't try to guess which way it's going. Just let the market tell you which way it wants to go.
Okay, Greg, before we wrap it up, let's take a quick look at this week's RBA rate hike. The 25 basis point hike from the Reserve Bank of Australia to 7% seem widely priced in, but Aussie dollar has failed to see more upside. What are your charts telling you for the Aussie dollar?
Yeah, it was an interesting move. Everyone is looking for the Aussie dollar to appreciate, and actually it rallied into the rate announcement. So when the currency didn't appreciate after the announcement, where does it go? It goes down. So we did see, it didn't make a new high after the announcement. So the market got disappointed, moved all the way down. We are seeing a little bit more of a bid off the bottom here. It went and tested 100-hour moving average, and was able to get back above that. Some of the moving averages are turning up on the shorter-term basis, so it may try to go higher from here. Having said that, it is a telling sign to me when a currency that has a lot of fundamentals going for it, high growth, high inflation, employment very tight, and a central bank that's raising rates, that it doesn't continue to move along its trend. It says to me that the currency is forward-looking. It's looking down the road, and that road may say that, if the U.S. is slowing, then China is going to slow, and if China slows, then Australia is going to slow, because Australia sends a lot of its commodities over to China. So it's the progression and the economic engine that's sort of being priced into the Aussie dollar, in my opinion, and that suggests the fact that we're not able to hit new highs in that currency suggests to me that it's looking down the road and seeing a slower Aussie economy as a result of a slower global economy, and as a result of higher rates over there, which is going to slow the economy down as well. So we'll be watching it very closely and seeing if we take out new highs. But my guess is that it has difficulty when it moves higher.
Okay, Greg, thank you very much for your insight and analysis this afternoon.
You're welcome. Thank you.
This has been your Forex Market Buzz with Greg Michalowski, Vice President of Trading and Liquidity at FXDD. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.